Hello guys, welcome to our YouTube channel. Today we are going to talk about a stock called IndiaMART InterMESH. The stock is one of the leading players in the B2B marketplace slash classified segment. It holds up to 60% market share in this segment. It allows buyers to connect with respective sellers where they can both meet each other and get to know about the products that they sell. There is no other platform that is this effective in this country than IndiaMart. Apart from its leading dominance in its segment, it is also diversifying itself with the investments that it is doing in places that it feels it can add value to. Today, we are going to talk about the stock and its prospective investment, and also we are going to tell you why IndiaMart is a very good investment. First, let's start about the basics of this stock. The market cap is around 13,000 crores. Currently, the stock P is 30.3, which is actually much lower to its peers in its segment. The return on capital and return on equity is, pretty good as well. Currently, the stock price is around 2,176, the high being 3,199. Okay. So the PEG ratio that we actually see for all the stocks, which is according to the growth that it is giving us, the PEG ratio is in and around 0.40, which is very healthy. So we can conclude that the stock price hasn't run up the way the growth has been followed up by this company. If you look at the price chart of the stock, you can see that over the past 3-4 years the stock has absolutely done nothing. If you go back to the 2020 levels, however, you can see that there's a good amount of return that the stock has delivered. If you look at the 10-year chart, you can see that this stock is a consistent compounder, and you can also see that there is a price consolidation because of its valuation, because of other triggers, due to which the price has been consolidating at some level since 2022. This we look at as a very good entry opportunity to cash in on the long term future of the stock. Company is almost debt free and also been giving a healthy dividend payout of 19.8%. Here, if you can look at the peers, the internet based companies that has been competing, or rather in this space, the one company that has in this space is actually Just Dial, and the PE of this stock is also 28, and India Mart is around 30. If you can see the other companies which are at very high valuations for the growth that they are delivering. If you look at the quarterly results, you can see that the sales have been improving quarter on quarter, and the growth trajectory has been very very healthy. If you look at the net profit numbers as well, you can see that from 2021 levels we have almost close to doubling. If you look at the profit and loss numbers for the annualized years, you can see that this stock is a consistent uh, growing company. And also, not to ignore the fact that after 2017 this stock has been doing really well. The company has been delivering regular profits, and also if you can see from 2020 levels, the profits have almost increased 3 to 4 times. You can see the EPS also increasing, from 2020 levels. This is why we think this stock is a suitable choice for an investment right now. If you look at the shareholding pattern, the promoters have been consistent, and they've held on to their stocks. The FIIs are holding on to their stocks as well, and they've been consistent here and there, just 2-3% around. But whatever FIs and public has been offloading, it has been picked up by DIIs or institutions within the country. So you can see that from 2021, where it was 5.34%, now it's around 12.10%. So even the public stock holding has come down, but DIs are making sure they have a very good chunk of this company. Now that we've looked at the financials of this company, we have deep dived into the fundamentals and the valuations of this company. Let's tell you what IndiaMART is doing. IndiaMART is basically a 20-year-old company which is a leading player in the B2B e-commerce marketplace. It holds around 60% market share in its segment, where it helps buyers and suppliers communicate and engage and trade their products. Okay. So basically, the buyer, if he wants something in this country, first he will either Google it or put it on IndiaMart. Either which way, he will find suitable sellers who are selling that goods in that segment through their profile. Then, the buyer and the seller connect happens. For the buyer, it's all free, guys. But for the seller, if he wants to incentivize and be on top, or maybe, come in the search results in the best possible way, he needs to take up subscription plans given by IndiaMart. The subscription packages are like silver monthly, silver annual, gold, platinum, and stuff like this. So the complete packages are based on the visibility, and the visibility decides who gets more, screen time when a buyer searches for something specific. You can give them the keywords, and these keywords will be searched, and you will appear first. For being first in that segment, and being able to list out yourself in the first of the search results, you need to buy these packages. And these packages cost you money. And this is how IndiaMart makes money, my friends. IndiaMart, over the time, has been successful in adapting all its subscription models, and has been able to get paid subscribers for all its offerings through all its channels. IndiaMart has also been successful in making itself that one-stop solution for all the buyers and suppliers that are doing business in this country. Now, let's look at the divide between the different parts of this country, and who are the paid subscribers, who are the unpaid subscribers, who are the buyers, and where do they come from in this country. If you look at this chart, it it is well diversified across geographies. The buyer percentage in metro cities is around 32%, the tier 2 cities it is 25%, and the rest of India it is 43%. Now, if we look at the paying subscription suppliers, the metro cities come up to 55% of the paid subscription, then the rest of India in 17, and the tier 2 cities in 27%. When I talk about IndiaMart, I want to tell you about its network effect. See, the thing about network effect is you go on telling about to different people that you're on IndiaMart. If it becomes some kind of authenticity for a company that it is listed on IndiaMart. Whenever a buyer looks for a seller online, if he's listed on IndiaMart, he thinks that that seller is authentic. Okay, so this has created a network effect throughout these years, and what it is doing is it is getting more and people registered on IndiaMart. Not all of these people might be paying people, but what it has done is made sure that all these free people will open their own catalog on IndiaMart. All of these people will list at least on IndiaMart. So this is the network effect that IndiaMart has managed to create. So if you look at all these things, uh, you can say that IndiaMart has considerably achieved itself to be an authentic B2B classifieds platform for all the businesses, be it MSMEs or large businesses, for their own visibility purposes. As the networking effect grew by multifolds, IndiaMart has made sure it has reduced its ad expenses as well. This has contributed in the decline in ad spends for the company. You can see in this chart that the ad spends versus the revenue as percentage terms has been reducing from FY16. If you look at FY16, it was around 19% of the revenue. Then it was 5.4% in FY17 and a very minuscule below 1% in the coming years. Now it is about 0.2% as on FY23. So what this does, my friends, is that it has increased the profit as a percentage or even the margin percentage in terms of turnover for IndiaMart. This has made sure that it is EPS accretive now and ad spends are not crossing the roof. The management has also shared that the advertising spends would be as limited as it can be possible, and they're only trying to enhance the brand recall rather than increasing traffic to the website, which has already been achieved through all these years. Now, let's understand the business model of IndiaMart. First, if you look at the sellers and the buyers, they are mostly people who are selling something and then would require something in return. They're also buyers of something else. So this has created something called as the community effect or a self-fueling business model. Large number of IndiaMart listings or people who are listing on IndiaMart are always looking to sell something and also looking at IndiaMart to buy something for themselves, be it in terms of raw materials or in some kind of services. Okay, so this has created something called as the community effect. Okay, now let's look at how IndiaMart earns its revenue. IndiaMart primarily makes its money from selling subscription packages to its people. One good thing about these subscription packages is that, be it a duration of 3 months, 6 months, 9 months, 1 year, 2 year, 3 year, or 5 year, the money is collected upfront. On larger packages and longer duration packages, the company offers very good discount to incentivize the people who want to take these packages to take for packages that are long term in nature. But even then, the people have to pay these fees upfront. That is very lucrative, my friends. So if you look at this pyramid, first is the free suppliers. These are these people who are listing themselves for free, then looking for maybe subsequent models in the coming future. Most of the people come in as free suppliers, then they look at like how the visibility is. Based on that, they look at other subscription models like silver monthly or silver annual and multi-year, gold, or even platinum level suppliers. Okay, so IndiaMart manages each time to make sure that they incentivize these people based on visibility for their products and search results to make sure they pay very well for their subscriptions. They also make sure that these people pay upfront so that IndiaMart can cash in on all these things in a very good way. Now, let's deep dive into all these companies that are trying to list themselves on IndiaMart. It's mostly MSMEs that are just starting up or companies that are just trying to manufacture something in a very small scale. These companies don't know how to express themselves in a nationwide kind of website or a platform. First thing that they do is sign up on IndiaMART, give them the GST number, and also make sure all their products are listed. Then, based on the requirements, they make sure that they are, paid users or free users or however it is. But for MSMEs, this is one platform where they would want to be exclusive and try to be visible so that they can get new customers to buy their products. Considering that the Indian market is huge and also developing on a daily basis, the total addressable market for this company to achieve its growth targets is quite huge. Let's just say 1 to 2% of the companies of this country are registered on IndiaMart. So that gives us 98% to be underpenetrated. And also in the future, these companies will tryly shift their focus online or try to make themselves discoverable in these online platforms. This will make IndiaMart very lucrative going forward and will also help IndiaMart grow in a very good pace. Now that we have spoken about all the positives of this company, let's talk about what are the risks involved in investing in this company. The number one risk is the VC money backed startups. There are many startups that are trying to emulate IndiaMart's model in this country and also trying to gather many people into their own website or to their own app by offering them freebies or free listings and stuff like that. It is a very high risk strategy to try to emulate a company like IndiaMart. But since they are backed with exclusive VC money, which will let them bleed for a few years before they can turn profitable, that is a risk that we want to see in the near future. The second thing that we want to talk about is like how IndiaMart addresses itself in the verse of all the competition that is going to come in. It's about a company that has already been established, and all the VC money, no matter how much money is being poured in, IndiaMart needs to make sure that it keeps its ground and make sure it keeps growing at a very steady pace. It should also look at how the people are responding to its paid subscriptions, and if these other companies and the newer companies are offering services at a lower premium, it should also make sure it should have a look at all these things and then do its own business. The other risk is the risk of fake suppliers. There's been reports that some of these fake suppliers are getting themselves registered on IndiaMart and they're fooling the customers by offering them services or products at a very low cost. These gullible buyers who are looking at buying very good products at a lower price usually get entangled between these scams and they usually fall prey because they think IndiaMart is a very respectful platform. This is something that IndiaMart needs to keep looking at. They need to make sure that all the suppliers that they're putting them on the website or the app, they need to be authentic in nature. IndiaMart needs to make sure all these checks are done before they onboard these kind of suppliers. Now that we have spoken about all the risk of this company, let's look at the growth levers that this company is planning to execute in near term. IndiaMart has a lot of cash on its books. Now it's up to the company to make the right investments in right space that will make this company a bigger company than it is already. So the company has baking headwinds on some of the sectors and it is actively investing in all these segments so that it can go and have very good growth in the future. IndiaMart has invested in five categories, that is accounting, the four companies that it has invested in here, Logistics, there are three companies that it is invested in the field of logistics. Payments, there's one in payments and SME finance. Then there is commerce and enablement that has, you know, is a very good prospect that needs to be looked at in the future. There are two companies where IndiaMART has invested in. There are also other SaaS. SaaS means software as a service. So this is something that IndiaMART is looking at in a very bullish way. So it is investing in a lot of companies that are in SaaS. There are four companies where it has invested a lot of money. There's also commerce and enablement that IndiaMART has invested in. These are all the investments done by IndiaMART for its growth prospects. It is important that IndiaMART keeps investing all the cash that it is generating through its core business into all these startups. It is also making sure that all these startups are somewhere related to its own segment so that it can maximize on the profitability. So this is something that companies been doing well at. At current levels, the stock seems very valuable, and also compared to its peers and its growth prospects that the company is showing, the investments that the company is seeing, we look at IndiaMART InterMESH as a very good buy at current levels. So you can look at the stock at your own risk ability and then have an investment for yourself. Please talk to your investment advisors and have your own risk ability before you try to invest in companies that we are recommending. Thank you.